everyone, and welcome to another episode of Trader Talks. I hope you are all doing well, and if you celebrate your Christmas, hope it was wonderful, and you're enjoying the time off wherever you are. As always, do remember the presentation is for educational purposes only. It should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. If you are on the podcast, the link for the YouTube is in the description, and also if you are on YouTube, let me know what you think about this move that we've seen in silver, not just overnight but over the last sort of few months, and your outlook for next year for all different types of commodities. Now silver, which is up about 150%, is actually up about, or was at its peak, up about 200% from the low that we saw in sort of March, April time. We'll have a look at the chart in a moment. It's a mixture of things. You've had obviously strong demand, you've had tight supply, ETF flows have been pretty big, and also you chuck in the Fed rate cuts, a weaker dollar, and it's led to a really decent sized push. And when we talk about that persistent supply deficit that we've seen, it's really underpinned prices, and industrial demand has become a major growth engine, particularly from EVs, solar panels, semiconductors, data centers, and clean energy infrastructure, which is positioning silver, or has positioned silver, as both a precious and critical industrial metal. Also worth just mentioning at the moment, gold-silver ratio just broke 60, which hasn't happened for over 10 years. The RSI on that chart, in particular, for anyone that looks at technical analysis, hasn't been this low for a many number of years, and sometimes can mark a bit of a change, a bottom in that market, and you start to see, in theory, silver come under a little bit of pressure and gold to benefit off of that. Now, we've seen over the weekend margin increases from CME. Now, this reminds me of back in 2011, not that I was trading at the time, but I relived it through a simulation from a company called Amplify Trading, now Amplify Me, where we reran 2011, and there was a headline where gold increases the margin requirements to trade gold futures, and it marked the top in gold. And we've sort of seen a little bit of that. You've seen profit taking, which have led to sort of a sharp decline in prices. And let's just have a look at the chart. This is a weekly chart, and as you can see, that low that I marked up from March earlier this year, to circle that, to the peak that we saw, by the way, literally overnight, up 193%, which is, incredible for those people that have traded that all the way. Well done. Also, I think another interesting level was what happened earlier this year. We had a sort of a double top as you look at it. Let me just bring this into picture here. Move that. Okay, there we go. And you can see one test in October, one test November, and then you get that next break to the upside. Really nice move, technical pattern, makes sense, doesn't it? The lows are getting higher, blah, blah, blah. So for anyone that traded just as we broke $54, it completely makes sense. That's obviously a level to keep an eye on for any point in the future. I'm not saying it gets back down there, but something just to bear in mind. And then when you look at the daily candle today, it's remarkable, actually, just to see that we did push higher and would now move lower. So what to keep an eye on? There will be people that are looking to potentially buy a dip here, and they'll be eyeing up the sort of this zone which coincides with a previous all-time high, what would mark a bit of a gap fill as well, and that comes in and around sort of $71. So that's the first sort of key level that I would be keeping an eye on as an area where potentially, in theory, if those people are looking to get long, they want to see a decent interaction around here to then target back up to those highs. On the flip side, if it does break that level to the downside, then obviously, that then acts as a bit of resistance, and you can start moving lower. So that's the first sort of key battleground between the buyers and the sellers, I would say. And then you can keep an eye on sort of all those previous highs. You can mark them up. I mean, look, by the way, just how nicely it has traded. Previous high breaks, comes back down, finds support there. Doesn't quite happen here, but it breaks there. And you can see plenty of times beforehand it's where you have a previous high. I'm just marking this up now. Breaks, come back, pushes on. So do we get that at $72, $71? Maybe something to keep a bit of an eye on there. And also, it's not going to be absolutely perfect, but it's probably worth, with conditions like this, just starting to, whether it be get your, Fibonacci extensions out as well. There'll be plenty of people that look at that for a pattern to keep an eye on there, make from the low to the high, and is it maybe the 64 or the 50% retracement level, which marks up with another point at $65? Could that be something that people look at? There's no real trend line on this at the moment, but it's probably worth just keeping an eye on this. The low that we had from November, just one test, two tests, hasn't got the third. But for those that are, monitoring this and want to stay long as possible, as long as it stays above the trend line, you feel comfortable. A break of that, in theory, starts a new trend. So that's how I keep a watch on this one. But certainly when you go down to the hour time frame, you can just see the significance of this drop. Real big push down. So short term, the key level I've got a mark on here is going to be $72, $71. Previous high, bit of an area where it gapped higher. And that for me is going to be the key point between the buyers and the sellers, the bulls and the bears to focus on. Naturally, you've seen other moves take place in other commodities. Palladium on track for its lowest day, or its biggest drop, I should say, since April 2022. Gold down a touch as well. But yeah, let me know your thoughts on it all. I want to know. Are you bullish? Are you bearish? For those that have been holding for a long time, have you taken profit, or are you a long-term investor and you keep building position and you get the opportunity to, essentially buy something that in theory could be 10, 15% cheaper by the time it gets down to a key level, and that's what you want? Let me know your thoughts. And also, if I don't speak to you before over the airwaves, I hope you all have a fantastic new year as well. Take care, everyone. See you soon.